Should you sell before the rates drop? This has been a common question amongst West Hartford homeowners over the past year or so. And whenever I get it, I take the same approach. I would be very cautious of anyone who is advising you to make such a big financial decision based on speculating the interest rates. I don't think anyone has a crystal ball and knows for sure what the market will do if rates drop. If we went back to the beginning of COVID, if you had told me and a lot of other real estate agents that that would actually propel the market and prices would boom here in West Hartford, Connecticut, I think we would have been skeptical. A lot of people thought it might happen the other way and the market might crash. So instead of speculating on what the market will or won't do, I'm going to take a different approach. I would look at your personal financial goals, motivations, lifestyles, and see if the move, A, you can afford, B, if it makes your lifestyle better. And if those two things are a yes, well then let's start to reverse engineer and work backwards off that. But if you're simply looking to make a speculative play, I would be very cautious of doing so and betting on the market doing one way or the other based on interest rates. Now, I do have two very strong theories that most people would agree with that could happen if interest rates drop. And one of those theories can make prices go up. One of those theories can, bring them back a little bit. I think a crash of any sorts is something that would be very hard to happen unless there was something extreme in the marketplace that we're not seeing right now that caused it. One theory is the interest rates will drop. It'll make everything more affordable, so more buyers will come into the marketplace, which will drive prices up again, create a lot more multi-offer situations, and make it even harder to buy, right? So that theory, people would say, hey, buy now before the rates drop, because sell now and buy because it's going to be easier to find that home that you want. But at the same time, if that does happen, your home value will go up as well. So it becomes a little bit relative. I always say if you're going to sell high, you're probably going to buy high. And if you sell low, you're probably going to buy low. So in that situation, you're selling high, but it's also going to be harder for you to find a place. I personally believe, and I think I'm more in the minority here, that what is more likely to happen is if rates were to drop, that would release so many people right now only have one reason that they're not listing their home. And that is that differential between new mortgage payment and old one. That interest rate is so much lower. People have the low threes, high twos. They don't want to give that up, despite the fact that they want to move. At some point, those rates are going to get low enough where that homeowner who's sitting on all that equity and who does want to move now becomes comfortable enough where they're saying, you know what, it doesn't have to get to 3, right? But if we can narrow that gap a little bit, I have so much equity in my house, I would like to do something with that equity, whether it's buy a new home or a second home or vacation or invest or start a business, whatever it is. There's a lot of people who I believe would actually flood the market and list their home once the rates get to a certain point. And when that happens, when the market gets flooded with inventory, what does that do to buyers? It gives them more choices, which actually brings the prices down. It makes the values for sellers even less. Again, this is purely speculative, as none of us have the magic pill or the crystal ball and can see ahead. And which is why I'll bring you back to, even if you're sure of one scenario or the other, bring yourself back to what you're trying to do as an individual or a family and ask yourself if it makes sense to move and can you afford it, right? And if the answer is no, and it only works if the interest rates were to move in the future, then stay where you are. Keep doing your thing, right? Keep saving money each month. Keep working on your craft or your job or whatever it is that produces your income. Focus on what brings you joy and let the future play out, and doors will open where they may. If you can't afford it and it's something you want to do now, don't let the high interest rate stop you either, right? Because the reality is at some point in history they'll come down and you can refinance, or if you can afford it the way it is now, if you do get any type of correction in interest rates, it's only going to make it more affordable, right? And you're going to be able to lock in the price of the market now. If there's one thing I've realized after doing this 15 years is if you go point A to point B from any 10-year time frame in history, the value of real estate is always worth more at the end of that 10-year period, right? So if you're in it for the long haul, you want to move your family for the next 7, 8, 9, 10 years, there is a very good chance that home is going to be worth more than it is today. So don't let that high interest rate scare you if you can afford it and everything else lines up in terms of lifestyle. So I kind of went with a little bit of a off-road approach to answer this question. I know I didn't answer it directly, but I would be very skeptical of anyone who gives you a direct answer, a definitive answer, because I think it's more of a situational answer based on a family or individual's goals and timelines than pure speculation. So if this was helpful, give me a quick subscribe. That's one of the ways I can tell if the content I'm producing is something that is worthwhile or adds value. And if you have any questions, as I always say, don't be shy. Call, text, email. My team and I, we're always happy to help. There's no question too big or small. Make it a great week.